This is Fintech Insider News. This week, UK regulators quiz Barclays after payday outage. Adyen and Yapily team up to optimize open banking for businesses. And Curve has become the first to offer Section 75 protection on purchases made through its wallet. We'll be discussing all of this and more on today's show, so don't go anywhere.
Are poor financial decisions holding your business back? Well, you are not alone. 60% of UK businesses admit that bad spending decisions comes from a lack of collaboration. It is a common problem, but the solution is much simpler than you think. Plio's Finance and Business Synergy report reveals how smarter collaboration between finance and other departments leads to better decision-making, stronger financial resilience, and ultimately business growth. With 76% of UK businesses agreeing that spend management platforms drive effective teamwork, it's clear that the right tools can make the difference. Packed with insights from over 2,800 finance leaders across Europe, this report is a must-read for any businesses looking to optimize spend and unlock new opportunities. Download the Finance and Business Synergy report at plio.io/11FS to see how better collaboration leads to better decision-making and how better decision-making ultimately leads to better business results.
It's back. The 2025 edition of our annual Pulse report, where we unveil and break down the best user experience financial services has to offer, is out now. Our experts have been busy researching and analysing product experiences from every corner of financial services, from crypto to inclusive design. Find out who were named our Pulse stars, the best of the best from 2024. Read our highlights from the state of UX in the industry. And discover the bold predictions that our experts have made for the year ahead. Visit 11fs.com/report to download your copy.
Hello and welcome to episode 935 of Fintech Insider. I'm David Barton-Grimley, Fintech Strategy Director right here at 11FS. You're listening to this episode right after the Super Bowl, but we actually recorded it the Thursday before, so congratulations to this year's champions, whether it's the Philadelphia Eagles or the Kansas City Chiefs. To be honest, I find it incredible seeing just how popular now the Super Bowl is in the UK. Like 10 years ago, it was absolutely nowhere. Now we're actually getting advertising for it. I saw one from David Beckham. I was like, wow, this is incredible. So speaking of winners, I'm joined this week by an all-star lineup of guests to break down the biggest stories in fintech. So first up, we have a Fintech Insider debut for Stefano Vaccino, founder and CEO of Yapily. Welcome to the show, Stefano. You have some big news, which we'll get into later in the show. But for now, please tell us a little bit about yourself and Yapily.
Thanks, David. Great to be here with you. I'm Stefano. I'm a father, husband, and also the founder and CEO of Yapily. I started Yapily in 2017 to tackle a fundamental issue in the financial services, which is access to bank account. As you know, for years, card network have monopolized the global movement of money, and banks have controlled data access. So open banking has been changing that, making payment faster, cheaper, and also giving people more control of their own financial data. And within this, Yapily, we are building the infrastructure to power all of this shift and change, helping businesses to connect to data in real time and also to initiate payment instantly. We do that for both retail and SME in UK and also across Europe. And maybe one last comment, I'm very happy to be here for the first time with also two friends. Jade and I worked together for 3.5 years, so I'm very happy with our friends. And also with Shachar, pre-COVID, we used to have dinner almost on a monthly basis at the house of Amir and Claire, which are common friends. So great to have a debut with friends.
I mean, I should have ordered some dinner. We could have got some beers. It would have been great. No, that's great to hear, Stefano, and welcome to the pod. So yeah, as Stefano said, next it's a warm welcome back to the podcast for Shachar Bialick, CEO of Curve. Great to have you back on the pod, Shachar. You also have some news that we'll get into a bit later, but in the meantime, how are things going at Curve?
Feeling going well. Just been asked it before the podcast began. It's the usual intensity of still startup to scale up and a lot of opportunities and the required focus. But all in all, no complaints on our side. Things are moving up and to the right and just keep working.
Amazing. Yep, just no sleep, but everything else is
With sleep
everything
when
else
you're
is
dead.
great. Indeed. Welcome back. And last but not least, we have a Fintech Insider debut for Jade Thomas, VP of Marketing at Primer. So it's really great to have you join us, Jade. Please tell our listeners a little bit more about yourself and Primer.
Thanks, David. Thank you for having me on the pod. I'm a big fan. BP Marketing at Primer. So we essentially unify the payments ecosystem, meaning that we're bringing together all the different payment services, whether it's your PSPs, your alternative payment methods, fraud, KYC apps, etc., all under one roof. So it allows merchants to be able to accept, optimize, manage payments all under one place. And I guess kind of Stefano said it all earlier, Primer aside, Stefano I used to actually report to. So I'm in a different fintech. But yeah, so this will be an interesting discussion today.
Amazing. Yeah, great to have you here. So we have a panel and now on to the news. And this is our top story this week. UK's banking watchdog probes Barclays over IT outage. This one is from Bloomberg, but to be honest, if you're in the UK, you've been seeing this absolutely everywhere. The PRA, Prudential Regulation Authority, and the FCA, that's the Financial Conduct Authority in the UK, are in contact with Barclays after an IT failure left thousands unable to access accounts for days. The outage hit Barclays' app, online banking, and payments, impacting customers on Friday, the 31st of January, which also just happened to be UK tax return deadline day, so not great, and for millions across the country, of course, payday. The bank fixed the issue by Sunday, apologized, and pledged to restore affected customers' financial positions. Regulators expect Barclays to review the cause, improve processes, and prevent future disruptions. So look, obviously this is a dramatic failure. And I think it's kind of interesting because on the panel today, we have three people from fintechs, so it'd be interesting to get a bit of a fintech reflection on what happened here. I mean, was anybody affected by this, either through business or personal? Yeah, go for it, Shachar. What happened?
So over the week, Friday evening, we start to see our so Curve is the wallet. It basically allows customers to connect all their cards into the Curve Pay wallet and either spend with a Curve Pay or Curve Pay card. And one of the things we always look after is the amount of declines in the system. If there's a decline, the customer is unhappy, can't complete the payment. And over late Friday, we start seeing our systems go berserk and declines rates. And a lot of our customer support getting tickets from many customers blaming Curve why the transaction is declined. So immediately our crisis team picks up to see what's happening, if it's our platform. We then find that all the declines coming from one issuer, Barclays. And basically from there start the communication we had to do to customers that this is not Curve fault. This is unfortunately a situation with Barclays. And I can tell you the good thing that happened behind the scenes is that Barclays did spin off a crisis management team that were communicative, I believe, with their customers, but not only, also with other companies been impacted by that, of which one of them is Curve. And it was very nice to see how Barclays is able to provide relevant information in time, which allows us to then communicate to our mutual customers of what's happening and updates every few hours of how the progression goes. Nonetheless, I think it was about 48 hours start to finish to get online, which I found, a bit insane. But I'm curious to see that, eventually there will be a report. I'm curious to see what the issue is. We're actually having internal bets in the company, what the issue is. My bet was on database issue, but let's see.
Interesting. Stefano, you also put your hand up. What happened with you?
I was one of the few that actually things were working. On the press, just mentioned that people were paying taxes, were withdrawing cash, and it was not working. I have both a personal and business account with Barclays, and I pay my taxes on the 31st, like everyone, waiting for the last day. And from a business account, also managed to make all the payments. And I do very rarely withdraw cash for personal reason, and I managed to withdraw cash on that day. So in my case, the experience was the opposite. I was probably one of the few that got lucky. But this outage highlights just how much should become used to have instant access to money, making payment, and how disruption can be severe when this doesn't happen anymore.
Absolutely, the cascading fault through the financial system is fascinating. From a fintech point of view, Jade, how do you see the importance of resilience? I mean, as Shachar was alluding to, like the idea that something goes wrong, even for a second, payments fail to some extent. Even the fintechs are going to be taking some of the heat here initially. And from the end customer's point of view, they just want the transaction to work, right? It almost doesn't matter where the fault actually comes from. So why is my payment not working? Like, how do you think about that?
Yeah, I was thinking about this earlier. I guess the most important lesson here is redundancy, both on the customer side and the business side, right? From a customer side, they're probably going to have multiple bank accounts. I'm sure many of us do, and probably Barclays could expect churn. I think that's fair to say. Speaking with my marketing hat on as well, from a reputational side, there is, a huge PR crisis going on. So definitely, if I was the CMO of Barclays right now, I'd be thinking, definitely expect that churn, but what can I be doing to regain that trust of our existing customers, but B, how can we win, more clients back? So I definitely think there's going to be some losses here, but it's just about how can we kind of rebuild that back up.
And this isn't the first time this has happened. I mean, every few years something like this does take place. I mean, for those of us in the UK, you might remember TSB, for example. There was the big outage that happened there, and they ended up by getting fined in 2022 by the FCA and the PRA about £48 million for operational resilience failings. And in that case, it was a botched IT migration. So there could be all sorts of reasons why this is happening. I wonder, Stefano, if there's an open banking element to this. I mean, one of the sort of foundational tenets behind open banking, of course, is that you're connecting from bank to bank. Does that affect open banking in any different way when a particular bank goes down? I guess you just can't make the payment, right?
Yes, ultimately, open banking rely on the same payment channel that banks use. So if you cannot access the bank account, you will have an impact on how the payment can or not be initiated in that instance. I think we are all, say, state-of-the-art tech company here, and so hearing about issue lasting for a couple of days, I think it's a bit odd in the sense that we are asked to design a system with the redundancy and the resilience for which something goes down and you have multiple data center, things are up and working again within a few seconds if you have two active data center, or if you're active and passive, maybe an hour or two. So a lot of this learning that we have as a technology company can be brought also in the service that banks have to offer. You mentioned actually something very interesting, the 48 million fine that it was given a few years ago. I wonder if instead of giving a ticket, the regulator should not tell the banks in this case to spend the same amount of money, but on infrastructure upgrade. So instead of giving it away, I want a remediation plan by which you upgrade your system. And this could prevent having the same situation occurring again in the future and protect consumers.
It's really interesting. I mean, it's, the flip side to that, of course, is that these systems are so, particularly with big incumbent banks, they're so overwhelmingly complicated. It's almost like a system that if you were to sketch it out on a whiteboard, and I've seen people try to do it at various banks, it's almost impossible. There isn't one person that knows everything that goes into these systems. And I guess, Shachar, as you were saying, like, it's incredible how unbelievably fast they did respond and get crisis teams together. But at the same time, the point that you mentioned, Stefano, is interesting. Like, I have any of you heard of a big fintech tech outage fault? I mean, of course, there've been fintech failures all we can talk about them. But a technical outage is not one that I'm too familiar with. So as you were saying, you guys are designing the systems to be operationally resilient from step one. Has anyone heard of anything big? Any big news?
Nothing comes to mind, but I think you mentioned, David, it's a bit unfair, I think, to measure Barclays, which is a fundamental bank in the UK, part of the largest banks in the world, exists for tens of years, almost 100 years, I think, or even more. And they are operating on legacy system and patch on a patch and a patch. So by definition, it's not resilient. The challenge, I think, for issuers like Barclays is that for them to overhaul the entire system, it's probably a project of 3 to 5 years, unless they're procuring those systems from external parties, which means another point of failure exists. And the other problem is more strategic, which is the bank still is a public company. They still need to show short-term results. So there comes the competition between short-term results to long-term strategic value that will create more resilience. And back to Stefano, having a fine will make them more eager maybe to go and spend that money. And it's not that they're lacking money, but the challenge is that CEOs look at short-term 3 to 5 years, and therefore they make a decision based on 3 to 5 years. Whereas the decision maker behind that needs to look at a period of 15 to 20 years, i.e. an investment of 5 years, 10 years investment in technology, slowly will get you to the right place. And by the way, don't be wrong. If I was a CEO of Barclays or the chair, I would probably do that, because that comes with a lot of significant benefits, where we see fintechs like Monzo, for example, that have a better infrastructure, and therefore they're able to provide more value to customers with better user experience, better AI, personalization, engagement. So all of the investment will not show fruits in the short term. It will definitely bring the right fruits in the long term. But it's expected, unfortunately, that those things will happen when you have a COBOL on Python, on PHP, and all mashed together somehow. And let's hope it's working.
Yeah, there's still no clear answer, right? Cool. And on to our next story. So this one is from the Fintech Times. Adyen selects Yapily to expand open banking capabilities in Europe. Adyen has partnered with open banking provider Yapily to enhance business account verification and merchant onboarding across Europe. Yapily's data services will be integrated into Adyen's platform to streamline onboarding and improve account verification. The companies also plan to explore additional open banking use cases, such as creditworthiness assessments for lending, for example. According to the article, both firms see this collaboration as a step towards driving broader innovation in open banking. So without further ado, it turns out we have someone here from Yapily. Stefano, it makes sense to come to you first on this one. Absolutely, right? So first off, congratulations on this news. The partnership with Adyen sounds amazing. What can you tell us about it?
Thank you. Obviously, the entire team is ecstatic because Adyen is one of the world's biggest fintech, certainly the biggest success in European fintech. And so helping them enhance the services to open banking is why we created the company in the first place. And partnering with company like them is a huge opportunity for us to learn from the best. So by integrating our data services, Adyen is going to make merchants onboarding faster, more seamless, and also more secure for the customer. And hopefully this is just the beginning. As a company, we like to earn our stripes, I say. So prove the quality of what we do, and then drive our customer to expand the use they do of open banking over time. For us, this is a testament of the hard work and the quality that we created over the years.
That's amazing. And I think the great thing about this news today is it gives us an opportunity again to talk about open banking. I mean, it's something that I love to talk about and so fascinating. There've been so many sort of pros and cons and controversies in various different countries about its efficacy. Jade, I want to come to you first because I think you have a very interesting perspective in Primer as a company that is aggregating almost like a vast amount of different payment methods and workflows and everything like that. Like, where do you see open banking, really kind of win, or, what kind of use cases do you see maybe your customers wanting to use it for?
Yeah, it's an interesting one. So Adyen are actually on our platform. So yeah, there are a lot of obviously we're merchant driven. So we're very merchant first in our approach.
Mhm.
So we have to go where the demand is. So that's the first thing. We see a lot of uptake in the kind of the other markets around the world. So that's kind of been the biggest shift. So places like Brazil, US, that's kind of been on top of mind, but obviously that could be kind of a vertical specific demand. We have a lot of customers within kind of travel sector, space, and retail. But what I do find interesting about the open banking space, and Stefano will remember this as well, is especially when I was at Yapily, that it was always about the open banking payments. So you mentioned earlier, David, about the highs and lows, and we're definitely riding, the highs of open banking payments. There was the announcement with TrueLayer and Stripe and all that good stuff.
Yeah.
But actually, what the Yapily and Adyen partnership is doing is actually paving a way for a new use case, which we actually really haven't seen yet, I don't think. And correct me if I'm wrong here, Stefano, but this is more on the data side for KYB and so know your business. And it makes sense because for someone like Primer working with Adyen, so like they want to know who they're working with. So they need to, they're a public company. They want to know that they've got kind of they've got like a risk threshold, no doubt. So they want to know who they're working with, and using data like that to be able to tackle that. Yeah, we're not really hearing much around this kind of use case yet. So definitely a shift, I think, from like the kind of open banking payments that we've been kind of typically used to hearing about. But I'm interested to hear what your perspective is there, Stefano.
I totally agree with you. At the beginning of the open banking journey, everything was around first a PFM, personal finance management, and then 2 years after, everything was about retail payment at checkout, and account payment was going to take over all the card transaction. And don't get me wrong, the adoption is growing very, very fast, faster than when other payment methods were introduced. However, there is a segment that is constantly underserved, which is the SME segment. And there are plenty of services that open banking can bring. Simply, SME connectivity is a bit more difficult because you can open a lot of retail bank account, but opening corporate or SME account is more challenging. And so testing in production is more difficult for company in our space. We were lucky that we started actually with SME. Our first customer was Intuit QuickBooks. And then we signed a lot of other SME focused organization. So now it's years that we have been doing SME data, and to some of our customers like Cresco, which is another payment company, and they power another listed accounting platform. We do also hundreds of thousands of SME payment every month. So for us, has been, let's say, the confirmation that in the SME space, there is a huge opportunity. And so it's great that Adyen is bringing this validation. And KYB is a fantastic use case because Adyen is onboarding on a monthly basis so many merchants directly, or is helping their customer onboarding merchants. And with open banking, you can do it in a few hundred milliseconds. And you can also, if you want, over time monitor if you want to give them credit lines. So there are so many use cases in the SME space.
If I may add to that, sorry, David, I just wanted to add to that point because something that we're seeing is just going off the SME being underserved. It's a really good point because it links back to, the redundancy piece here. So a lot of the startups are looking for, they could be getting offboarded as well. So it's quite a risky strategy going down the road with like one PSP as well. So it's interesting that firstly, Adyen are looking to serve that more by putting this into place. But yeah, they need kind of multiple providers. So that's something that we're actually seeing more and more. And a lot of these kind of SME startup type customers are coming to us to be able to introduce some of that as well.
That's super interesting. I mean, we've also found from some of our research that B2B payments is one of the areas as well that people feel a little bit better using open banking for, because, for much higher, value transactions, you get that transparency. It's maybe a little bit quicker than some of the other payment rails. It's it's really interesting. I'd just love to unpack a little bit more, Stefano, how open banking helps with the KYB process. Is that because you're almost getting that initiation directly to the bank account? You can see what's going on there. You have that direct connection. Is that how it works?
Imagine you set up a process to onboard a merchant in a marketplace or your own platform. At the point of setting up the account, the user will say name, surname, general characteristic, and then the payment company or the marketplace, they will have to verify that this information is correct. And they will also have to verify that the money where you're going to send the proceeds of transaction is the right bank account, and you are the account holder. So they have to perform AML checks. And so with open banking, within a few clicks, 8 to 10 seconds, you can do this verification. If you remember in the past, both on a retail perspective, but also SME, they were asked to transfer 1 cent. And the 1 cent had the reference in the payment, and sometimes it was arriving the day after or a couple of hours after, and then you had to go back on the platform and confirm the reference you saw in the bank account to show that you can access the bank account, and so you were the account holder. With open banking, that actually you are transferring the 1 cent, but the operational cost was significantly higher, can be done in few hundred milliseconds, obviously with the steps, say 8 to 10 seconds. And so you can onboard the SME immediately. You don't have to wait for this process. And also you can imagine from a conversion standpoint, if you're asking someone to get off the platform, go on the bank account, copy a reference, come back, the drop-off is significant. So this is a way of doing KYB and also anti-money laundering check with the user in front of the screen. Fast, efficient, much cheaper, and much more secure.
You're right. That is a fantastic use case that just isn't really talked about enough in the market. And Stefano, just a final word on this this news item. This is a first step on your partnership with Adyen. Is there anything else coming down the road? It's just the beginning, right?
As I said, we like to earn our stripes and prove our quality. However, it's early days and there is only, let's say, so much I can say at this stage. But it's always our job to prove we can do more and try to earn it by showing the quality of our work. So as soon as we can shout out about other things with them, we will definitely share it with you.
Awesome. And on that note, we're just going to take a quick pause here. Back shortly.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Average is not invited. Not if you're holding your company off-site in Las Vegas. We aren't on friendly terms with the bare minimum, and unenthusiastic is uninvited. Las Vegas's creative energy and world-class hospitality want to bring your company off-site to crazy new heights. That's why fear-based leadership is afraid of Vegas, and boring won't be there, but it will be watching the meeting recordings later. Plan for the extraordinary at vegasmeansbusiness.com.
Welcome back. Before we return to the news, we wanted to tell you about our latest Insight show. So last month, we released our annual 11FS Pulse report, where we explore the UX trends that shape the past year in financial services and look ahead to how things might evolve in 2025. To expand the conversation, we invited Public CEO Yannick Malling, one of the brands we highlight in the report, and author of the report, 11FS Pulse Head of Product Joe Colchester, to join the podcast and share their thoughts on the future of customer experience in financial services. So to listen to the episode, just head to the podcast below. All right, back to the news. And our next story is Santander's US digital bank platform marks $2 billion in deposits. And this one is from payments. The bank introduced Open Bank in October of last year. While the service launched by offering high-yield savings accounts, Santander has said it wants to be a full-service digital bank by the end of the year. That means offering things like certificates of deposits, payments and checking accounts, whilst also expanding its branch network. In 4 months, it has surpassed $2 billion in deposits. So a quote from them, "Our aim is to become a national digital bank with branches. We are uniquely positioned to provide US consumers with the digital banking experience of a fintech and the strength and stability of a leading global bank," said Swati Bhatia, Santander's head of retail banking and transformation. So have any of you heard of Open Bank?
Yeah.
Yeah, you've heard of them?
Familiar. Yeah.
A little bit. I've heard of them. I mean, they've largely gone under the radar, I think. I know they're doing, stuff in America, of course. I mean, look, in the UK, reflecting on this is a trend, of course, we're familiar with. So, we can give some examples. Chase, UK, right? Of course, we have the fintech neobanks. But it's kind of interesting to see Santander make such a big play in the US in particular. I mean, what does everybody think? I mean, does it make sense for another big incumbent to launch a neobank in the United States? Does anyone have a point of view on this?
So I think if I jump in, Santander is, I think, top 5 banks in the world. They're very close to North America. They have a very huge footprint in Latin America, of course. And what Santander has done in the past 5 years, at least, in the very least, if you just read the public news, they've changed a lot of the leadership and brought a lot of people who are experts in paytech, experts in finance, experts in UX, and started to build the bank from the ground up. And I think what they're doing right now in the US is a separate infrastructure, a separate direction altogether for Santander. And my suspicion, if it will be successful, that the entire ecosystem of Santander will eventually become part of that activity. The challenge I see is that, number one, the US is an extremely difficult market, and I will never like to compete with Chase. So
Yes.
there's a high bar of competition in terms of brand and capabilities. And the question is, what's the hook to bring customers? And since the hook of Santander by giving money, very nice saving accounts, is working. But what I suspect happening is that they're using this service just as a sideshow for the savings while they have a different bank as the main bank. So now the question becomes, is this a big enough hook to move my credit cards, my deposits, my checking accounts, my business account to Santander? And they have the resources to try and make a good fight. But at the same time, they have huge headwinds from different wallet participants who will try to hook you through the wallet and then commoditize banking. You have huge competition now with Capital One Discover merger, who basically have now deposits and checking accounts with a credit card. And Capital One considered to be top 3 issuers in the US for credit cards. So challenging market, a lot of headwinds, but a pretty remarkable brand by itself. One of the most beautiful approaches I've seen of a legacy bank trying from the ground up to go forward. So wish them best of luck, and they might maybe surprise us. I hope they would.
Yeah, and as you say, there have been some retreats. The US market is very difficult. So N26, Monzo, because it's just very, very difficult to gain that foothold in the United States. But when you think about it as an effort to replace the core, that becomes interesting. But even there, I think, as you're kind of hinting, there've been some like pretty high profile either failures or just like not being able to to stick, right? So you've got Marcus by Chase, which is a sort of precursor to what you see to Chase in the UK. You've got quite a lot of other initiatives which are still going, right? So in the UK, you've got Metal, for example, which is still there. You've got Kinetic on the SME side. You've got various different ones of these all over the world, some doing very well and some not doing very well.
Okay. I think the main challenge in the US are two. Everyone thinks the US is one country. But it's not. It's like 20 different countries. It's like they have East, West, Middle America, all those different cultures there. And the other challenge is that if you look at advertising spend, I think 40 or 50% of all advertising spend globally is focused on the US. So it shows you the competition for customers' attention. And then you have the cognitive bias of customers' behavior change. So it's a difficult market to penetrate. You require a lot of resources and resilience and stamina. So what I hope is that they will continue despite the challenges that would like face. And if they will do so for 5, 6, 7 years, they might be able to get to the top 10. But if they will stop in 2, 3 years because they're not seeing enough results, that might bring the everything flat, like happened with the likes of Marcos and others.
It's interesting. Jade or Stefano, I mean, are either of your businesses expanding into the US? I mean, how do you see that market?
I comment in a second. If you don't mind, I wanted to comment on something that you just mentioned, and Shachar as well. The high interest bank account are definitely a great hook. But I think all of us here, we open high interest bank account and we probably close them as soon as we could get money market fund access or something else. So it's just a hook. So the real test for Santander will be if they can translate into long-term engagement of the consumer and hook them up with other everyday type of services. So they're getting this customer on board with something that is very appealing, but it's not going to last forever. And so they have to find something else. One thing that I think Santander has and other challenger bank didn't have, they have a huge footprint in Central and Latin America. And we shouldn't forget that 20% of the US population is of Hispanic ethnicity. And so there are huge corridor there. So 20% of the US population is 60 million people. It's the entire UK population, basically. And so these are people that might have family in another country where Santander is number one, rather than being a newcomer. So this is something that is quite unique and can play in their favor. Going back to your question of US expansion, clearly for a lot of fintech, US is a destination. Open banking is definitely growing and changing in the United States. So from our perspective, we are observing, and when the time is right, we will definitely try. But as you said, a lot of companies tried and then retreat. So you have to have a high level of confidence in your plan because it's very easy to then a few years after come back and having wasted a lot of money. So I think definitely Yapily is monitoring, and then at some point we will consider it.
Jade, any thoughts?
Yeah, I think, exactly. I agree with both guests, but the US is an interesting market where we have customers there already, but we're remote, so kind of like we can gain access to many different markets just by default. But I think that the thing here is, which if we draw upon what Santander have done, is just being very, very intentional if anyone's thinking about going there, right? So you look at how they've targeted customers. They've been very specific to that kind of middle income earners in very specific states. So as Shachar mentioned, you shouldn't treat it as just one entity. They've gone after very specific northeastern states. So I would guess that that is kind of been the attention behind some of their decisions. But what I find the most interesting about that story is that I think they're actually planning to also do physical presence. Which is unusual for especially when you look at the state of the high street banks in the UK. You see more and more closures. I don't really know how that's going to work yet. So it'll be interesting to see how that kind of hybrid model will play out there.
Yeah, it's like, can you imagine a Monzo branch or a Revolut branch? I mean, I think at some point in the future that might need to happen.
But I think shipping is smart, pretty clever, because it increases the trust when you see the building with the logo of Santander, and increases the brand recognition. Especially if you focus within a certain area and you have the branches in that area, you would have a flywheel effect of brand and trust coming in. The more you're going to see the brand out there. We used to see Santander in the UK, Latin America. They used to see that in the US. It's not a brand you're familiar with.
Yeah. It's also the move that kind of makes you think that this is a long-term plan to almost replace, the point that you made, Shachar, earlier is fascinating. The long-term plan to almost replace the core of what Santander is. If they launch these branches, then the switch out in the long term kind of makes a lot of sense, right? One to watch. Very, very fascinating. Let's move on to the next one. And this one is from FF News. Curve is the first digital wallet to offer Section 75 protection on all cards, even debit. So Curve has become the first to offer Section 75 protection on purchases made through its wallet. So what is Section 75? Section 75 is a long-standing consumer protection law in the UK that ensures credit card providers share responsibility with merchants for purchases ranging from £100 to £30,000. However, this safeguarding to date has only been available to credit card users, not debit cards, leaving them vulnerable in cases of faulty goods, unfulfilled services, or retailer insolvency. And actually, you tend to find that this is one of the main reasons why people like using credit cards over debit cards for certain purchases, right? So Curve has moved before other leading digital wallets, such as Apple Pay or Google Pay, in doing this. So it's really amazing. Curve offers the same robust regulatory protection on purchases made through its digital wallet, regardless of the card used. So, Shachar, obviously coming to you on this, how have you been able to do this? I mean, tell us. It's amazing.
That's pretty cool. I think it shows the power of the technology we built and its capabilities. But let's start with the problem in hand. When Curve, until we launched this product, Curve was a debit card. That basically meant that because Curve is a stage wallet, it doesn't work like Apple Pay. Curve basically have back-to-back transactions. We basically treat the payment card that you are all familiar with as an identity token. And then we connect it to a host of accounts you linked from Visa, MasterCard, PayPal, even DeFi, if you'd like, other wallets inside. And enable you to use from one token, whether it's a device or a physical Curve card, any funding source you want. And if you Google Curve today and Money Supermarket, Money Saving Experts, you would see that Curve basically, when you use your credit card with Curve Pay, you would lose the Section 75 protection on the credit card. Whereas if you use your credit card with Apple Pay, you wouldn't lose that. So it was kind of a point we had to fix. And that idea came in when we also at the same time introduced the Flex product, which allows customers to snapple or swipe now, pay later, any past purchase into installments, or the Flex card, which allows you to choose any subsequent purchase into installments. So now Curve Wallet also comes with a Flex card inside that gives you a credit line to be able to pay with installments anywhere you are. So combining that capability of Flex together with a credit card basically meant that now the Stage Wallet is underpinned by credit product. And that basically means that every transaction made with Curve, regardless of which funding source you're using, that goes through a credit agreement. And that means that now you get protection of Section 75 on any payment you do into Curve, regardless of the payment method. So what usually customers did before, unrelated to Curve, many customers to get a protection when they're buying usually a big purchase, they paid £100 with a credit card to get a protection on the entire purchase, and the other £1,000 through the debit card, which is a bit insane, but it gives the protection. With Curve no longer have the issue. If you still pay with your debit card, you now get the regulatory protection from the wallet itself. And basically, we took a negative point that Curve had in the past and made it a positive point, an advantage against any other wallet. The other thing he did, which we haven't published it yet, but it's the first time you're going to hear about it here at the podcast, so congratulations.
Amazing.
Because it's now a credit card and the way Curve works, it basically means that Curve Wallet is the best method for you to build your credit card, your credit score. basically every transaction you make is posted to the bureau, and then you repay that either within 24 hours or within the payment terms of Flex. So by just making payments and using whatever funding source you wish, debit card or credit card with Curve Wallet, it sends more information to the bureaus to enable you to increase your credit score over time, which is the best credit building product in the market globally. But we haven't published it yet. It's going to come soon.
Wow.
So Section 95 is what we're starting with right now, which is the most protected way to pay.
That's so cool. Just a quick question on the merchant side. What's the impact? I mean, is it? I imagine it's positive for the merchants as well, but do they then have to pay any more fees if the payment is being?
Well, merchant now would say credit. Well, actually, the merchant acquires Adyen of the world would say Curve Pay now is a credit instrument, so there is more costly for the merchant acquirer. But majority of merchants, 99% of them, are paying a merchant discount rate. When you tell merchants interchange, they would look at you with a sheep eye. What do you mean interchange? So they're being paid, charged 1.5%, 2% by the merchant acquirer, regardless of whatever funding source they have. So the merchant acquirer will see increased cost of 10 basis points because now it's a credit card. But it's very similar to just a different product you chose from Chase, which is a credit card. You prefer to use Chase to the customer instead of a debit card. And the other thing is that merchants will be required to meet regulatory requirements. So if they don't provide the goods as expected, they will have regulatory requirement to pay back to the customer, which is also very helpful for the ecosystem because merchants now more responsible and our customers are less, more protective.
It's amazing news. Jade, I'd love to come to you. How are you seeing the behavior of usage with sort of debit cards versus credit cards? Are you seeing that change over time? The kind of global headline we hear is that over time there is a degradation of the use of credit cards, kind of overall globally. But yeah, what does that look like on the ground for you?
Yeah, it's quite interesting actually. So cards are still quite prominent for sure, and still continue to kind of be there. We definitely do see the increase of the digital wallets. Again, that will be very much dependent on the market, the vertical, the customers who are driving that, and their consumer preferences off the back of that. But yeah, I think this kind of change does make sense to bring that across to the debit cards as well. But yeah, definitely very strong adoption still, stable with the cards. I'm curious with Curve just to see the results, because I imagine that you will see obviously first mover advantage. So, we probably attract a lot more users from this change. But I'm also, curious around, will that open up more from like a disputes perspective as well? So
it's a good question.
The way we were always thinking about the Section 75 is that when you use a card, a Visa or MasterCard, they have quite robust chargeback rules. You have a very similar protection. The main difference is that scheme rules are a private market and Section 75 is regulatory protection. And in fact, until we found the solution and this innovation, what Curve did, similar to PayPal, is what we call Curve Customer Protection Policy, which we try to imitate the protection that the Section 75 provides customers to try to fend off the concern some customers may have or had previously with Curve of eliminating the Section 75. So all in all, where we're seeing it's going is that we're seeing, of course, more engagement of customers signing up to Curve. Customers start putting bigger shopping with bigger tickets to the Curve Pay wallet. And the other thing with regards to other wallets is that the beauty here is that no other wallet can do that. Technically impossible for them to achieve that. And the main reason is because other wallets are pass-through wallets, which means if you use a credit card, it tokenizes the plastic to a digital token, but it's the same card that I'm using. If you're using a debit card, it's a token of the debit card that I have. They cannot change the form factor, if you like. And Curve, because it's two-stage transaction, the form factor is always hidden, never been shared with the merchant. The merchant doesn't know which form factor you used. So you never have to share your information with the merchant. It might be breached. And then your real card numbers and sensitive account numbers will be out in the wild. We're only sharing the curve card number, which acts as a firewall. And the other innovation of this firewall is this exact Section 75 protection.
So fascinating to hear you talk about it, and we're all going to be following this over time to see how you get along. It's brilliant. Cool. Now on to our next segment, and here we are taking a quick look at one more news story this week that we don't have time to cover in full. And this one is from Fintech Finance. Project Nemo and Fintech Fringe launch Innovation Challenge to tackle financial exclusion for people with learning disabilities. In partnership with Fintech Fringe and the Payments Association, Project Nemo, which continues to drive industry-wide change, ensuring financial products work for everyone, is launching its first challenge to tackle financial exclusion for adults with learning disabilities, with winners showcased at Pay360 on March the 26th, 2025. 1.5 million people in the UK are living with learning disabilities and facing challenges in managing payments, and this initiative aims to develop fintech solutions that enhance accessibility and independence beyond restrictive measures like lasting power of attorney. Fintechs with customer-facing or B2B solutions can pitch to a judging panel of end users and financial institutions, with 5 winners securing a high-profile platform at Pay360, giving them exposure to over 6,000 industry professionals. A live online launch event on February the 10th will provide guidance on participation. So if you're a fintech and you're operating in the UK, please go check it out. Fintechs can register their interest right now. To find out more, we spoke to friend of the pod and Project Nemo lead Joanne Dewar.
Project Nemo's latest fintech call to action launched this week to identify and showcase existing fintech products and services that may contribute to enabling safer, independent payments for adults with learning disabilities. This is in response to learning from leading learning disability charity MenCap that for the 1.5 million people with learning disabilities in the UK, payments and fraud is the number one issue on their helpline. Meanwhile, Government Disability and Accessibility Ambassador for the banking sector, long title, Kat Townsend, has identified that improving options is something that has been identified across banks of all sizes, and there's an interest to learn how fintech can lean in and help. Partnering with the Fintech Fringe Forum, Project Nemo invites fintechs with an existing product or service which is either for customer or can contribute to a wider solution to register so that we can showcase their solutions. 5 finalists will have the opportunity to pitch live at Pay360 at London's Excel on the 26th of March. There is a launch webinar on Monday at 3 p.m. Details can be found in the show notes or email hello@projectnemo.co.uk or find me, Joanne Dewar, on LinkedIn. Thank you.
And if you're interested in finding out more about this or applying, we'll put a link in the show notes where you can find out more information. All right, and on to our final segment, and finally, something a little bit different this week. And we want to have a little bit of a discussion about what is your favorite financial services advert of all time, assuming that our panel does actually have one. I certainly hope you do, or maybe not. We're recording this episode just days before the Super Bowl, the biggest American football game of the year. However, by the time this episode airs, the winner will have already been crowned. So beyond the action of the field, much of the world will be focused on the commercials aired between plays. That's kind of the thing that everyone knows about, right? With an estimated US audience of around 100 million viewers, Super Bowl ads are big business. The price of a 30-second spot has surged, with this year's cost estimated at $8 million. Alongside the usual advertisers such as beer brands and fast food chains, our 4 financial brands have taken the plunge and secured slots. Got Homes.com, NerdWallet, Rocket Mortgage, and TurboTax. So this got us thinking about the most impactful financial ads of all time. So does anyone have any kind of ads they've seen before that they think are a bit like, that's a bit either funny or weird?
I have 2 actually. 2 of the OG fintech in Europe. One, it was a mixed ad and PR stunt from Wise or Transfer White back then, when they got all in underwear and they wanted to show the transparency of the service. versus, let's say, the banking system back then. This was highly memorable, fun, not expensive at all compared to a Super Bowl. I think people talked about it for the following 10 years, how cool it was, with the founders as well being there. And the second one that I really liked was, again, another OG of the fintech. It was Klarna, the smooth payment one. I don't know if you guys remember it, but it was all about smooth hair with the dogs, smooth cheese, and made Klarna very, very memorable and fun as well. So these two are the two that I remember the most, and they are both probably by now 10, 12 years old.
I had forgotten that Snoop Dogg did a
Snoop Dogg was
fintech
involved
thing.
as well, yes.
I remember that.
Yes.
Wow, yes. Oh my God.
Yeah, so Klarna and Wise of the, 10 years ago were the most memorable to me.
If I was to call out a startup example, Yonder. So I remember that I think you've had Yonder on the podcast maybe, but they did a quite unusual kind of stunt around Wimbledon, being the kind of unofficial sponsor. And I thought that kind of like how creative they were just to be a little bit different. Yeah, it just really stood out because I guess like as startups in the fintech community, we don't have the same budgets as, these bigger players. So I'm a big believer in trying to just do something a little bit different, be a bit outside the box, break out of that fintech like echo chamber. But yeah, I thought what they did was really cool.
Yeah, really smart. Really, really smart advertising. That ad agency deserves an award. It's a great way of getting free brand impression. Shachar, any ideas?
I was thinking really hard, and I like watching ads and find clever ideas. And the only thing I came up with actually was the Wise one. It also was connected with advertising out of home with don't let the banks fuck you in currency instead of the word fuck. But
Oh yes,
remember. But yeah, so nothing comes to mind specifically. But I can talk about some ads of Curve running right now, which are pretty great. And maybe actually, I'll give you.
Oh, that's cool.
I'll give you a backside story. Actually, it's an interesting one. So last year we ran we were chosen by Muscat as the #1 wearable enabler across Europe. And basically, anyone with a Garmin or Apple or Huawei or Samsung watch, we're enabling them because many banks did not participate in their XPay enablement. And we went with a guerrilla campaign across London. That the first idea came from my team is that they wanted to put the middle finger on the Big Ben, because it would be very in your face. We're very much rebel, because the entire campaign was like a ring on your finger, so you can pay. But it looks like that. And I feel like we have few lords and viscounts in our cap table. It's like, no, you cannot. And I'm Israeli, and it's all the history of what's happening in the context. Like, no, you cannot do that. There's not a clue. And eventually, we just went with Vans and some other projections everywhere else, which was very successful. But it was really funny because it really felt like gonna be, yeah, let's do that. And it's like, no, we cannot do that. It's going against the government. We believe in them. They're doing a great job. Let's not get involved in politics. It's not good. That's all the funny.
I can imagine a part of you is like, what if we did just do that? So there is one, and I have to confess, I had to Google this because my mind was drawing a blank, and I really do think the Snoop Dogg example is just so crazy when that came out. Is FTX, and I mean, all of you will remember there was a time where pretty much everybody in fintech was like, oh my God, FTX, it's the future, and blockchain is the future, and everything like that. And of course, they spent a lot of money on the Super Bowl ads with Larry David. And, Larry David's association with FTX has really cost him quite a lot. And there were a lot of other celebrities that, and politicians and whatnot that were associated with FTX, but they were doing a lot of kind of sports ads, weren't they? And stuff like this. They were trying to be this kind of, very cool lifestyle brand. And yeah, that didn't go so well for them overall. So there you go. And on that note, that wraps up this week's Fintech Insider News. So thank you so much to today's guests. I've really enjoyed the discussion today, everybody. Where can people find out a little bit more about you and your companies? Stefano, start with you.
On our website, yapily.com, or my personal LinkedIn. Please reach out. Always happy to have a conversation.
Awesome. Shachar.
LinkedIn, Twitter, or curve.com.
Amazing. And Jade.
Yep, same LinkedIn, or we're actually hiring for a number of roles at Primer. So head over to primer.io/careers.
Cool. Go check that out. And as for me, LinkedIn, David BG. Thank you so much for listening to today's Fintech Insider. If you like what you heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or a friend? Why not? Help us out. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts@11fs.com. Thanks again and goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.